5 seconds it stays on.
Roger 1791's in the chat.
So many diapers.
We are.
Who's gonna need the diapers?
Oh.
Me.
You were the hedge funds when the price starts
5 seconds
running.
it stays on.
It doesn't matter.
Roger 1791's
Well,
in the
they
chat.
did say financial runs, so get the diapers ready.
So many diapers.
We are.
Who's gonna need the diapers?
Oh.
Somebody, we got feedback.
Me.
We got feedback. You
Hold
were
on.
the hedge funds when the price
5
starts
seconds
running.
it stays on.
Let's get that off. All right, cool. Hi, everybody. Welcome to Boss Blunt's Think Tank. I'm Boss Blunt, the Butcher of Wall Street. Today, we're going to discuss shorting preferred shares, which is likely one of the most dangerous things that short hedge funds can do. Well, aside from creating billions and billions of synthetic shares and naked shorts and so on and so forth. But we're not going to talk about is the contracts too much. We're not going to talk too much today about married puts and divorce puts. We've talked about that for ages. We're going to discuss specifically certain things like wash sales, manipulation, shorting preferred shares, and AMC's brand spanking new APE dividend. Hashtag APE. Now that's a beautiful fucking stock ticker right there. Thank you everybody for joining us. I'd like to thank all of you 20,000 plus beautiful red-pilled YouTube subscribers that have decided to open your eyes and come and join us for a wonderful ride here on what the fuck is happening with AMC. Did you guys know that in 2014, the New York Stock Exchange charged Citadel Securities with engaging in wash sales over 500,000 times using computer algorithms? For those of you that are unaware, a wash sale is where a buyer and seller are the same entity and there's no beneficial change in ownership of the underlying asset, meaning that they sell the shares to themselves. This is similar to...
And yet they were allowed to make Citadel Connect.
And then they trade it in their price distorting dark pool by the name of Citadel Connect, for example. Excuse me there. And they got fined $115,000 for over 502,000 violations. That is an absolute fucking travesty. People should be outraged. But the reality of the fact is, most people have no idea this is happening. It's the only reason they're able to get away with this. Because if more people knew, there'd be a lot more than 4+ million AMC shareholders. Same thing for GameStop. And because they are held almost entirely by retail investors, such as you and I. For those of you that are unaware, again, my name is Marcel Kalinovic. I'm a small business owner, a retail investor, and an entrepreneur. I have been trading for over 18 years now, and I don't take losses. I can have unrealized gains and unrealized losses. But at the end of the day, I'm here for the long haul, and I know where my conviction lies, and that is in the fact that the government always lies.
Yeah.
Wolfie, what do you think about our good friends at Citadel committing wash sales out of desperation in order to manipulate stock prices? What do you think about Susquehanna and other shorts against retail shorting a dividend-paying stock that we love, like AMC, GameStop, etc.?
I think they're like cockroaches. They're the cancer of the market. The things that they do and have got away with, the fines that they've paid because they've made 10 times, 100 times, 1,000 times more. He went from £8 million out of 2008 to the company it is today. Are you seriously telling me with that amount of returns every year and the people that he's got that have come in as investors? They know what's going on. They see the fines. They see them banned in China. A citadel for you. And what do they do? The regulators, what do they do? The people filing in FINRA, what do? They allow him to split the market up into three. And then he's got his other cronies, his other pals, you know, these big, super powerful people. You think they don't lean on each other or just have a chat with each other? Let's go for lunch. It's been shown again and again and again. The fines again and again and again. The repeat offences again and again and again. And it's still in business today. And he has the audacity to sit there and brag about being able to sell and provide, because he's got a market maker exempt, which none of the public know about to this day. So he can just print whatever he likes. Imagine somebody who sold the deeds to your house 1,000 times. And then the day you come to sell it, you got 1,000 people who already think they own it. He's robbing people blind. He's doing it every day. He might do 99.9% of his work legitimately. And he may be another Steve Cohen and know nothing that's going on. But Citadel have got 3 areas of the market wrapped up. They rob in front of our orders. They rob when we delivered on our orders, and they rob when we try and sell our orders. And it isn't business. It isn't this market maker privilege that he should be getting away with any longer. You can't have somebody, it's like having a gangster that shot 100 people, but as long as he don't shoot another one, he's fine. But he does, and you just go, oh, well, he shot 100. No one's paying attention. Well, we are paying attention. So they're cockroaches. They're all cockroaches. Only this time, we all turned up. We shone the light. There's nowhere for them to hide. There's no dark spaces. There's no turning this back. This is not 2008. We're ready to go. We have been. We got educated. We continue to be educated. We continue to shine the light. We ain't going quiet. We're not leaving. We're here till the bitter end. Whatever that end is, when that final whistle goes, the truth will be known. There's nowhere for them to hide it. They can come out and put all their mainstream media and all the giants that they've got behind them and all the FUD. They can use all these people that they've used for years, decades. We have ours. We have West Christian. Go and look him up. Don't rely on Reddit people and stuff that have gone out and berated on him. Susan Trimbath. We're blessed to have her in this community. And have a look at Wall Street Conspiracy. Go and have a look at all the things I've flagged. All the things that bosses talked about. Other people are talking about. Time to open your eyes and realise you've been lied to forever. It's their game. It's their rules. It's their tools. The only thing that's changed since 2008, genuinely, 5 to 10 million people turned up and they call themselves apes. It's about time you come and introduce yourself and find out why.
Wolfman.
Oh, that's great. You called it, man. You called it. A lot of people seem to forget, how the fuck did we get here? Well, apes love video games and movies, and they're not a lot about to let them get bankrupted by overzealous hedge funds like Melvin Capital and Citadel, Susquehanna. For those of you that already forgot, because I know a lot of people have a short attention span, and for those of you that are not yet aware, the CEO of Interactive Brokers, a man by the name of Thomas Peterfy, told us specifically some very enticing news. And that is, well, basically, broker-dealers and shorts are pretty much fucked. And if it wasn't for the fact that they went completely position close only on January 28th, they probably wouldn't be here anymore. Take a quick look at this. Listen to this. It's 5 minutes of absolute fire. Mind-boggling, eye-opening fire. That if you can't understand what the chief executive officer, a man, Thomas Peterfy, a man that has more years experience in finance than most of us have been alive, well, I don't really know what to tell you, but he lays it out really clearly. And all you have to do is do a little homework into the synthetic shares, the naked shorts, the manipulation, is the contracts abuse, the futures, the options, the swaps, married puts, divorce puts, I could just keep going. The wash sales, the spoof, I could literally keep going, but I'm not going to because that's obnoxious. If you don't understand, the reality is that the markets are already broken. And if buying and holding breaks the market, maybe there's some more serious underlying problems to begin with.
Let's just start with this simple question. How close we were to this system breaking, something failing. How close were we, Thomas?
I need everybody to be quiet just for the next 5 minutes in the tank.
Breaking, something failing. How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares while only 50 million shares existed.
Wow.
So as the rules are today, the long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this, the way I see it. Number one, we would have to get the short positions published once a day, because we currently have it only twice a month. And second, we would the SEC would have to require brokers to charge an additional 1% of margin for every 1% of short interest. And that would then raise the margins progressively so high that people would stop shorting stocks.
So margin requirements would have to increase as short interest increases. That seems to be the view from you, Thomas. I'm just wondering, from your perspective, overseeing a broker, is there anything you can do to protect your clients before the SEC or the regulator has to tell you to do it?
Of course we can. That's exactly what we did. We increased our margins. So
why does the regulator need to make that decision on your behalf, Thomas? I'm just speaking out loud with you, thinking out loud, trying to work through this process with you. Why do you need the regulator to make that step?
Well, so first of all, I do not know the short interest daily, and that would be important for me to be able to know how much to increase the margins by. So the regulators could require that the short interest be reported daily. That's
A lot of people don't pick up on what he just said there. Thomas Peterfy said that, I don't really know, as the chief executive officer of one of the world's largest brokerage firms, what the short interest percentage or what the short interest is every single day, because it's only reported twice a month. And what he's saying there is that as a broker-dealer, he's facing, or should I say IBKR, is facing certain levels of volatility and risk that in which they're being placed under because of the short interest not being properly reported. Therefore, as he stated as well, the broker-dealers have to go in and fetch the shares at any price. Let's finish this up. We got about 2 minutes.
very simple. Secondly, the regulators tell us the minimum margin we must charge, and we are free to charge more, and that's exactly what we did. But some brokers may not know how to deal with this. That's why I think it would be good if the SEC required all brokers to charge more on shorts.
Thomas, another issue that came up as well was the conflict of interest issue as well. And I know for you that you have a different model. You're not reliant on payment for order flow in the same way other brokers are. But Thomas, can you speak to that? The explosion of commission-free trading that we've seen over the last several years, and in some parts dependent on the payment for order flow. Can we have one without the other?
Can we have the explosion of interest in trading without payment for order flow?
Can we have the explosion in commission-free trading, or at least the democratization of markets that we have seen over the last several years without the payment for order flow factor in all of this?
But look, I mean, the commission between zero and, for example, we charge less than like $1.95 on the average trade. That difference is almost negligible, right? So the average trade is probably about $50,000. So whether you pay zero or you pay $2, that's not much of a difference, right?
So do you think the conflict of interest is not an issue?
No, I don't think so.
Thomas, what would you like to see asked today? And who would you like to see those questions aimed at?
I basically would like to ask the SEC why they didn't act on the morning of January 28th, because I was so scared. I can't tell you how scared I was.
Well,
Talk about honesty, true honesty.
Thomas, what were you scared about? What does failure look like? You said we came close to breaking. What were you scared of? What did you think was going to happen?
I was scared of a domino bankruptcy. I mean, I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480, and then suddenly, I guess, it didn't go further, but it could have gone further. So
he had to watch his words carefully. If you noticed, he said the price of GameStop went up to $480, and instead of saying, and then we went position close only, he said, and then it couldn't go further. That was a very interesting choice of words, because he knows exactly what would have happened if that were the case. Robinhood, Webull, IBKR, possibly, many brokers, broker dealers, hedge funds, family offices, even prime brokers would have gone bankrupt.
And then suddenly, I guess,
Dominoes.
it didn't go further, but it could have gone further. So if the shorts had known, and if the longs had known that they have the right to ask for their shares,
yeah,
and they really wanted a short squeeze, that's what they would have done.
You're not testifying today. Have you spoken to the House Financial Services Committee? Have you spoken to anyone in Washington about these issues?
No, I did not.
Are you looking at reaching out to them?
Well, eventually the SEC will have to look into the hole in the system, and they will have to stop it. And I assume that they will ask for comments, and we will send them a letter.
It's as simple as that.
And they will have.
Peter Fee was scared of a domino bankruptcy. Ladies and gentlemen, what does that tell you as to the realities of what's going on with these hedge funds? The reality is that it's not a conspiracy if it's proven true time and time again, repeatedly. Are investors short a dividend paying stock entitled to the dividend? In reality, if you are short a dividend paying stock, such as AMC and the dividend stock ticker APE, APE, which stands for AMC Preferred Equity, you are not entitled to receive the dividend and must pay it instead to the lender of the borrowed shares. I think this is pretty self-explanatory, but I'll go into more depth and speak on the subject a lot more. First of all, I would like to thank my friend and think tank member here, Pantheon AMC. Make sure you guys check him out on YouTube. Exceptional information. He helped provide me with some further information here, and a fantastic slideshow, which I will share some of it with you guys. And basically, the price of AMC will likely be reduced because the value of the APE dividend will offset this reduction. So if AMC will, so let's say theoretically, be cut in half, because you will also receive another dividend, which is by the name of APE, which is worth that other half. This dividend is a preferred share, okay? And shorting preferreds is playing a dangerous game, according to Seeking Alpha and any other investor and individual that you will find that actually understands what's going on. The reason is because it lacks liquidity. Look, it says here, their lack of liquidity and usually generous dividend distributions serve to increase that danger. The ability to issue up to almost 5 billion shares of APE is a good thing because there's generous dividend distributions increasing the danger of the lack of liquidity. People, I'm going to say something that may not make a lot of sense right away, but I can assure you, I'm sorry, I take that back. I'm not a financial advisor and I can't see the future, but I can nearly assure you that the issuance of more APE shares or the let's put it this way, the transfer of APE into AMC, let's say the conversion, would lead, regardless of dilution, it would lead to further delta hedging by hedge funds and family offices and prime brokers and broker dealers, et cetera, et cetera. It would lead to further fear of missing out buying by retail investors and institutions, and it would lead to a further increase of gamma. Gamma is required for a short squeeze, and that, my friends, is why I showed you that IBKR interview just now from Thomas Peterffy, because if people that held the stock, say for instance at GameStop or AMC, had sold some of their options for a profit and exercised some of their options to get shares, the brokers such as IBKR, Robinhood, Webull, etc., would have had to physically go out, not physically, would have to go out to the market and buy the shares at any price. He literally said that the stock price could have very easily gone into the thousands and caused a domino bankruptcy across the financial industry. Ladies and gentlemen, this increases the possibility of a forced closeout of a short position, which serves to increase the already increased danger. Now, even though the price of AMC would be reduced, we'd receive the offset of the reduction offset and through the value of APE, and the net dollar amount owed from shorted, loaned, or rehypothecated shorts will not change. Short sellers will be responsible for paying the APE unit to lenders, and they will not be distributed the APE unit on the 22nd of August, like retail investors will, requiring them to purchase APE at market price when closing out a position on AMC. Now, in regards to rehypothecations and loan shares, a client's shares of the APE unit will need to be repaid to the original shareholder on August 22nd. Depending on the extent of the loan shares and rehypothecation, there will not be sufficient quantity of APE units, potentially requiring brokers to go into the open market to purchase them off of the New York Stock Exchange and lit markets such as IEX, etc., or recall loan shares prior to the August 22nd issuance to avoid this. It could trigger a change in price to the positive. It could cause a negative price action as well, depending on the way that they attempt to handle it. There's no restriction on AMC's ability to offer the available APE units into the open market. Selling APE units would dilute APE shareholders, but not AMC shareholders. However, in my most humble, non-financial advisor opinion, and this is not financial advice, hodling APE would be the best thing that retail investors could do. Selling APE would be the worst thing that retail investors looking to make money on a short squeeze through AMC could do. Again, this is not advice. These are just my thoughts, and I've done a lot of due diligence to come to this conclusion. I think a lot of the people that are actually well versed in the stock market would agree. Proceeds from issuance of APE units into the market by AMC could pay off, or just in general, could pay off the measly $5 billion worth of debt held by AMC. It could retire deferred leases, which would mean that they could finish paying off some leases and some rents on some of their theaters, further increasing their bottom line, their fundamentals, and reducing the ability and the need for shorts to further short the company. They could also use it to acquire competitors, upgrade theaters. Anything would be good for the company's bottom line, thus increasing my conviction in AMC as a whole. Because even if it doesn't squeeze today, tomorrow, or next week, or next month, I remain convicted in the fact that if Adam Aaron puts up for a vote for APE to be converted to AMC, if enough retail investors vote yes, and it does pass, it would lead to further increases in fear of missing out buying, delta hedging by broker dealers, hedge funds, market makers, etc., and the ability for gamma squeezing to actually occur. Then, if you take into account the fact that a lot of retail investors are probably going to take some profits on options and then exercise other options, it will force those broker dealers to go out and pay whatever the fucking asking price is. So even if halts occur, which they have and they will, even if suspensions occur, which they have and they will, it gives people the ability to see higher prices. Eventually, even if in the immediate short term, the market makers use that as an opportunity, they use the 5-minute halt as an opportunity to load up the dark pools. They can load up orders into giant dark pool lots and then sell them or buy them at a certain price in order to reduce the actual price change. This causes a distortion in price discovery. Meaning that if people are smart enough to understand that dilution of the AMC stock would lead to AMC making billions and billions of dollars, which would lead to us making more and more fucking money, even if it takes a little bit longer, it would be the best thing that most people could probably do for themselves. Because company debt is not a bad thing. They have many companies have it. Coca-Cola's got $25 billion. General Electric's got $95 billion in debt. CVS, GM, Ford have $70 to $100 billion in debt. You know, you name it, Verizon, Comcast, AT&T, they've got massive stock prices, but they've got $105, $107, and $166 billion in debt each, respectively. This is absolutely okay because a corporation is allowed to have debt. They use money to make money. Have you ever heard that saying, it takes money to make money? Well, I don't necessarily think it to be entirely true. It sure is a hell of a lot fucking easier to make money with money than to do it when you're completely fucking broke. Debt is a tool, plain and simple. Now, I like this article from Seeking Alpha, even though it's a little dated, because it gives you some great insights. And sometimes I forget that a lot of people may not be aware or may not have been watching this channel for the last year. With those of you that have, I give you an extra special shout out, and I appreciate you truly. But I will say this, short selling is the sale of a security that is not owned by the seller or that the seller has borrowed. Short selling is motivated by the belief that a security's price will decline, enabling it to be purchased back at a lower price in order to make a profit. Short selling may be prompted by speculation or by the desire to hedge the downside risk of a long position. Since the risk of loss on a short sale is theoretically infinite, short selling should only be used by experienced traders familiar with its risks. Now, here's for one of the primary reasons why shorting preferreds is a bad idea. There's a constant risk to the short seller, apart from this risk of runaway losses. The short seller's also on the hook for the dividends, such as stock ticker APE, which we just discussed, that may be paid to the shorted stock. And if they reach out and buy them all, and they're still not all able to cover, AMC could potentially convert APE into AMC, make a shitload of money, issue more APE, thus diluting the APE stock, and forcing hedge funds and broker dealers to have a whole second round of short squeezing. Ladies and gentlemen, I don't believe this is going to be a one-day event. This is going to be a sequential short squeeze that could potentially take several more months. And I'm totally okay with that. Because every time the stock price goes up or down, I've got an opportunity to make money on shares and options contracts and then exercise some of those options contracts in order to increase the number of shares which I hold. Fixed income dividends are the primary reason why many people invest in them. Furthermore, preferreds are thinly traded and lack liquidity, which makes them poor candidates for shorting. The initial difficulty is being able to borrow available shares. After accomplishing this, the investor now hopes for the preferred share price to fall, which will enable him to buy back those shares at a discount. That's what shorting is. However, before a short can accomplish this, he's responsible to cover any dividends that were distributed to the preferred shareholder. Now, if this causes a reduction in liquidity or collateral, this would mean margin calls, and margin call defaults would then lead to further requirements of buying more of the same ape token that just caused this problem. It's a vicious cycle of dominoes, and that's exactly why Thomas Peterffy said that. It's a never-ending cycle of dominoes until the very last domino has fallen. Remember, those shares you sold had been borrowed. Remember, Citadel Securities has $68 billion worth of shares sold. Securities sold, not yet purchased. That means they already sold them short and haven't bought them back. And they use fair value accounting. Okay, those are two very different things. They use fair value accounting to come up with that $68 billion. They don't use the fact that AMC and APE could potentially be in the $70 range, $700 range, $7,000, or even $70,000 a share range. Now, do I really think that AMC would go to $70,000 a share? No. Is it possible? Absolutely. Is it plausible? 100%. Is it likely? Very unlikely, only due to the fact that before that occurs, the DTC would have to step in order to prevent a complete financial meltdown, because that would eliminate all parties in the OCC, DTC, per my understanding, on their actual levels of liquidity, because the OCC is self-insured. They've got trillions and trillions and trillions of dollars of cash available to them through the means of collateral. Grandpa Barney says, I'm not leaving. We're going to be so fucking rich. Much love, boss, and much love to you, Grandpa. Thank you for supporting the think tank. We appreciate you. So remember, those shares you sold have been borrowed. Consequently, you owe the owner of those shares any dividends that were distributed and were collected by the shareholder you sold them to. And if by chance you happen to buy them back at a higher price, expect your loss to be compounded by those dividends you now owe, because they're fucking infinite. In addition, for heavily shorted stocks, there's a risk of a buy-in. This refers to the fact that a brokerage can close out a short position at any time if the stock is exceedingly hard to borrow and the stock lenders are demanding it back. That means share recall. For fuck's sake, are you listening? Are you fucking paying attention yet? Share recall could happen at any time by the very broker dealers who have issued them, by the very prime brokers who have borrowed them, like BlackRock and Vanguard, who are lending out their shares to Citadel and Susquehanna and Virtue and all these other market makers and short hedge funds. Are you paying attention yet? This is especially difficult with preferreds because of their normally limited liquidity, which means the potential for the forced closing of a short position might be significantly increased. But this is ideal for a short squeeze when the already limited number of shares in the float are reduced even further. Apes own 90% of the float, excluding ETFs. 85% if you include ETFs. It doesn't matter. This could be accomplished with an incredibly small amount of money. Another reason why shorting can be a very risky bet, especially when shorting preferred shares. Short sellers will be responsible for paying the ape unit to lenders. Short sellers will not be distributed the ape unit on August 22nd. But even if they had, because institutions own such a small percentage, under 25%, I know the math doesn't add up, right? How can retail own 90%, or say 85% excluding ETFs, and then 25% institutional ownership, and that's not including all of the shorts? That's way over 100% already. I know it doesn't add up because they're called synthetic fucking shares. So even if they received this ape dividend, which they're not gonna, per my understanding, it still wouldn't be sufficient for them to receive over 55% voting, and therefore if they cannot convert and they're the owners, they wouldn't be able to dilute further. Ladies and gentlemen, short hedge funds are fucked. AMC may seek to obtain stockholder approval at such times as the board of directors shall determine of an amendment to the certificate of incorporation to increase the number of authorized shares of common stock to a number at least sufficient to permit the full conversion of then outstanding shares of preferred stock into common stock. This means that they would come to us as retail investors and say, we, the board of directors, would like to convert APE units into AMC units. And this would mean that we would receive a lot of money, and we would be diluting AMC slightly, but we would then be able to issue another round of APE shares because there's still not enough of them. And that would mean that short hedge funds and prime brokers and broker dealers have to go out and fetch the fucking shares again at your price, at my price, at whatever the fucking ask is. Currently, there's no vote scheduled yet. This can only take place if the board of directors proposes and us as shareholders vote to approve the authorization of additional common shares at a future AMC Entertainment stockholders meeting. Currently, there are no common stock shares available to allow conversion from APE to AMC. If we allow the issuance of new common stock of AMC, they will be able to transfer APE into AMC, thus making us potentially, and in my humblest opinion, this is not financial advice, filthy fucking rich. Now, what would happen to the options chain? What would happen to the options chain? You know what? Do me a favor. We got almost 1,900 people in here, and I love you all. Drop a like on this video. Share it on your social media. Let's break that 2,000 viewer level of resistance with this shitty YouTube algorithm that only shares it with a limited number of people, so we can share this with more retail investors, whether they're AMC apes or not, so they can maybe open their eyes and see exactly what's going on, directly from the words of the Chief Executive Officer, Thomas Peterfy from IBKR, directly from Motley Fool and Seeking Alpha and Investor.com and all these other websites that can tell you exactly why shorting preferred shares is such a bad idea. I appreciate you guys very much. The options chain. The exact options, the effect on the options chain is to be determined. But my best guesstimate would be that it will become an adjusted options chain, just like many of you saw on other stocks recently that issued a dividend, such as BBIG, for example. Excuse me. So if AMC is cut directly in half, we don't know if the price of the option would be cut directly in half, but you would be, because you're receiving now a second security by the name of hashtag APE, you would now have the exact same monetary value that you had previously, or more if the stock price goes up when APE begins trading on the open market. So potentially, the adjustment would cause a direct split, and you would have one option of AMC at half the price for half the strike price at half the value, and one option of APE at half the strike and at half the value, thus equivalent of the exact same total strike and value and monetary value of AMC that you had prior to the split. The APE dividend price at this point is unknown. It is not 1 penny. 1 penny is par value. Okay, par value means that's the value that AMC had to assign to it in order to issue the dividend. That does not mean that's what's going to be paid for by short hedge funds. They're not going to pay a fucking penny. Not for a split second. Maybe a fraction of a second one might be picked up for a penny. But from there, sky's the limit, baby. When a dividend is announced, both call and put options are impacted by the dividend date. Put options become more expensive since the price will drop by the amount of the dividend, all else being equal, and call options become cheaper due to the anticipated drop in the price of the stock. The APE distribution on August 22nd is not dilution of AMC shareholders. No shareholder will have a reduced percentage of ownership in any way. The sale of or issuance of additional APE units by the company after 8/2022 of 2022 would be dilution of APE units. But again, that would lead to a further FOMO, delta hedge, gamma squeeze, short squeeze situation. Now again, if investors buy common stock of AMC before the dividend date of August 22nd, 2 days prior to that, so, sorry, hold on one second. That's not the case. Yes, okay. If you buy it 2 days prior to the issuance of the dividend, which is August 22nd, you would then be able to receive the APE AMC preferred equity unit dividend on the shares purchased. So because trading is T+2, trading day plus 2 more, in order for that to be reflected, I believe you would have to buy them by August 20th in order to receive the dividend on the 22nd. If you sell your AMC shares before August 22nd, that investor would not be entitled to the APE equity units. So each preferred share of AMC is equal to 100 shares of common stock. Okay, there are 10 million shares that will be converted to APE, and this implies there will be 1 billion APE shares available. Based on the 516 million AMC shares outstanding, AMC will be issuing a dividend of 516 million APE units to shareholders. This is a 1-to-1 ratio. That makes it really easy to see, if I've got 1,000 shares of AMC, that I am owed 1,000 shares of APE. And if I don't have them, I'm going to raise fucking hell with my broker. I'm going to file complaints, official complaints with the regulatory bodies such as FINRA and the DTC and the SEC. And I'm going to make a huge fuss about it on social media so that everybody else can see exactly what kind of criminality is going on. This implies that AMC will retain, because there's 1 billion APE units, if they issue 516 million to shareholders, they will retain an additional 483 million and change APE units for themselves. This is absolutely phenomenal. This is putting big bucks in AMC's coffers. Short hedge funds are about to pay us our fucking money. And again, as I stated just a few minutes ago, if you weren't here for that, it may take a lot longer than a day or a week or a few weeks. This could take a while. This could take a while. Be smart. Be smart about it. Don't be a paper-handed bitch. Don't paper-hand your fucking shares of AMC and APE if you want to see the true potential. Each APE unit represents the equivalent of 1 vote. This is very different to many other preferred shares. Okay, you can see here that there is, in some preferred stock, no voting rights, but that's not the case with AMC. Each AMC preferred equity unit represents the equivalent of one vote. Okay, this is a very, very special dividend that has never been seen on the stock market before. So, as each APE unit represents an interest in 1/100th of a share of AMC, and it will be evidenced by a depositary receipt. The company will deposit the underlying 10 million shares of the preferred stock with the depositary. The depositary shares will be entitled to all rights and preferences of the preferred stock as applicable in proportion to the fraction of a share of a preferred stock that those depositary shares represent, the underlying. The company has applied to list the AMC preferred equity units on the NYSE under the symbol APE. I could not be more fucking apish about that. So again, this does not apply to APE right here. And apparently, neither does this because the risk is huge. Absolutely huge. We've seen quite a few halts, huh? We saw, how many halts did we see today, guys? 2? We saw 2 5-minute halts at least? Somebody correct me if I'm wrong there. Real quick, Hashim Ashraf says, boss, I would bet my last penny that Ken Griffin, Jamie Dimon, and Larry Fink all have AMC ticket, all on personal watch list with Pepto-Bismol and antacid. We're coming for you, and we're not fucking leaving. You got that right, brother. There's been several halts today. AMC and GameStop both were hit with halts for limit up and limit down bands, and were paused for trading for 5 minutes. Right? Here, let me give you this here. This is directly from the NASDAQ. These circuit breakers were adopted to prevent massive volatility, as was seen after the flash crash of 1987. It's, you know what, Dave Lauer calls this a Band-Aid solution, and I have to agree with him. I think it's an absolute Band-Aid solution. They don't address the underlying market fragility or volatility. They just stop trading. That's great. Again, my man Dave Lauer over here continues to say they're similar to the kind of controls you find in the futures markets, and led to a haywire open in 2015 when it became apparent that future circuit breakers were not aligned with equities circuit breakers. And just for today, for those of you that are unaware, AMC has more options, more strike prices added to the options chain. You heard me correct, ladies and gentlemen. The market makers have added a $40 strike price for this Friday, August 12th, that would allow them the ability to hedge. They added the strikes from $30 all the way up to $40. And for those of you that have been buying calls and such on AMC for the last long time here, know that those were not there on Friday. Therefore, the market makers are using the $40 strike price as a hedge against their short positions. Do you know what that means? It means they expect the price to go up. It means they need those in order to use those calls to marry puts and calls. Yeah, literally marry them. Yes, it's called married puts and calls. This prevents them from needing to buy shares in order to hedge for your purchases of calls, because they just marry it, or puts, because they just marry it with the opposite end. And today we saw 2 5-minute circuit breakers, per my understanding.
Oh,
I'm so fucking pumped. I could not be more excited on this. And I'm not even excited about the price yet, because like I said, this is going to take a while. But the reality...
I'm excited that you got 2008 viewers as I watch the screen.
Welcome, everybody.
You're excited because we're the end game.
Yep.
That's a great point, my friend. We're in the fucking end game now. And I expect a lot of criminality a lot of volatility, a lot of changes in prices, in emotion, in FUD, fear, uncertainty, and doubt being spread all over social media. You will see people who you believed to be educated on the stock market saying things on Twitter such as, if we sell APE and buy AMC, isn't that good for AMC? No! No, it's not. It's not fucking good for AMC at all. If people sell their APE, it would allow short hedge funds the ability to buy APE and thus keep the price of AMC and APE down further. If people hodl APE and AMC, it creates the mother of all fucking short squeezes.
We're going to be so fucking rich.
Brother, you guys want to know why they do these 5-minute halts? Because market makers need time to load up the orders on dark pools. They have to take time to put all your orders into a massive lot and sell them or buy them all at once for a very, very hidden low price that basically distorts the price discovery of markets. Go ahead, my brother.
You good?
Oh, yeah. Can you hear me?
Yeah.
All right, great. I got a little feedback there. Mark, I need you to mute, please, my friend. Unless you're speaking, by all means, go ahead. If you got something to say, I'd love to hear it.
What do you think about the, this is a sidetrack from earlier. Do you still believe the Sequentia margin call is real?
The Susquehanna margin call? Well, ladies and gentlemen, I never said I believed it was real or fake. I said it's an unsubstantiated screenshot. Now, I understand I'm not saying that you're trying to make any insinuations or anything like that, but I do have to be clear with people, not yourself, but just people in general, because a lot of people can't fucking read. And what I said was that unsubstantiated screenshots show massive $48 billion margin calls against Susquehanna. Is it real? Probably not. That's a massive margin call. Is it plausible? Absolutely plausible and possible without a shadow of a doubt. Do I really think it's real?
To that I say, all right, all right, all right.
That's right, brother. I don't know, and I don't really care, to be honest with you, because it doesn't affect me or my favorite stocks in a positive or negative way, whether it's real or fake. If it's real, the stock price goes up. Potentially. I'm not a financial advisor and I can't see the future. If it's fake, it doesn't matter. Nothing's going to happen. It's not going to change anything. So I just wanted that to be clear for people. A lot of people say like, oh, it was run through an editing checking software and it was shown to be possibly fake. Yes, but this black box that somebody used to cover the recipient could also have been what flagged it up as being fake. $48 billion margin call, that's massive. It's probably not real. But if it would be, hey, we'll find out in a couple days when the stock price goes through the fucking roof. Because again, covering by equities traders on short positions would take about 2 days, trading day plus 2, in order to reflect that price action on our favorite fucking stock.
And I'll tag on that.
Go ahead.
So the other thing for me, which I can never help strategy-wise, from their point of view, what would they use? What tools have they got? What are the sort of ploys that they'll use? How are they going to get into the community and get... They're using you. They're using us. Anyone who gets excited every time there's a bit of news. Friday night we get told by Adam Aaron. Thursday night we get told by Adam Aaron. Great call, earnings call, and a brilliant bit of information. But before we have time to digest it, we're on every social network. We're all in there discussing. We're all throwing ideas. If we're not, they are. They'll throw them out there. Everyone jumps in. We've all got these different ideas. Do you know what that looks like to the hundreds of millions of innocent people that might have been looking? Like, nobody knows where to go. No one knows where to look. We're all pointing in different directions because we're acting like mainstream media. You're feeding what they want you to feed. Why can't everyone ignore it? Probably because you don't understand why you need to ignore it. The mums and dads, brothers and sisters, uncles and aunties, nans and granddads, the ones that have lost 401s, their homes, their families, the people that have been hurt in the past, they might be looking. They're looking to us in social network. They're looking at us on Twitter and Reddit and everything else. But we're too busy. We're, some people within the community, some are bots, some are haters, some are interns sat in an office that are being paid to send this shit out. When we get stupidly excited, we look like dumb money. When we get stupidly excited, I understand it. So should you, because you're doing it. You never see me doing it. The significance and importance of this is everything they've ever done, everything they've ever said, everything they'll continue to do is not directed at you. There might be 5% of you, 10% of you. Adam Aaron said 80% owned. He was really proud when he came out and said 90% held by us. That hasn't changed. Perspective. Most people ain't on social networks, don't go on Reddit, don't go on YouTube channels, etc. But the ones that come here to look, see what you're doing, what you're participating in. You want to have followers. What? And you're moaning that it hasn't squeezed yet. You want to get a following, but you ain't fact-checking first. You want to be part of a community, but you're asking silly questions that you spent no time considering. It's just a thought that come in your head, so you flag it up, and then afterwards, because you hope everyone will forget, you think we don't see it. We see the chat. Someone came in earlier and said, why has he put Peter Fry up? The man we're looking at who sacrifices his family, his time, his business, his hours in his day to help us. If it's for views, when he asks you to hit the like button, and I sit there and watch the like button don't get hit, you think he's doing that for his sake? He can go to work and earn more money on any YouTube channel. He comes out and flags up Peter Fry, and we have someone in the chat. You might be new. You'll know who you are. So if you are, it's for everyone who's not in the play, everyone who hasn't been educated. It's the same reason we don't get excited when there's new news. Wait until the DD's done. And if you're not smart enough to go and do the investigation and the groundwork, wait until pantheons of the world and bosses of the world and bigums of the world come out with some info, and then make your mind up. Because the people who don't understand why that video was shown tonight are either not caring, FUD, plain selfish. I want to be rich today. We all want to be rich today. Most of us have gone to work for 50 years trying to achieve it. And here I am. So now we're going to watch a video that Boss flagged up tonight for the mum. Just looking at the kids and holding down 3 jobs. For the dad who might have lost his house in 2008. For the man who's just got told on Friday that he's lost his job because the interest rates have gone through the fucking roof. That's why we keep repeating sometimes some of the information that I'm ever so sorry you got to sit there and endure again. Well, there's always something to learn. I learned something watching it again tonight, and I like to think I pay attention since last January. I remember when that was live. I'm not sitting here moaning, because it ain't about me, it's about us. You and me against them, not me against you. So the person that flagged it up, that's the reason he showed it, and then linked it to the next bit. If you've been here long enough and you follow the man, he has receipts, and he links his information to try and explain to you. For anyone who's never watched one of these videos, all we've ever done is try and flag up everything that we feel is important, that might not be what the status quo is telling you, what might not be what you're represented on mainstream media. We don't force feed you, we don't tell you what to buy, we just tell you where to look. And if you go away and spend a little bit of time and look, then hopefully you'll be able to work out what you need to do for you or your wife or your husband or your mum or your dad. Appreciate it, boss.
That's incredible. Absolutely good point. This is the best thing that has ever happened to most people. Now, Ponzi Finance posts a great point here. Now, I know you see Steve Bannon, but don't run away just yet. Love him or hate him, or you don't know who he is, it doesn't really matter, because this is not about left versus right. It's about us versus them. The poor's, the 99% versus the top 0.1%, 0.01% in reality. The whole Great Reset, the financial markets, they are all linked. Whether you like it or not, politics, geopolitical issues, macroeconomics, all matter in AMC. I understand a lot of people still don't understand that, but the reality is that the Federal Reserve is going to have to bail out these fucking prime brokers, just like they did in 2008 and like they've continued to do since that, because they haven't stopped. I know you guys may not know this, but the reverse repurchase program is a bailout that occurs every single day to the tune of trillions of fucking dollars. And since the June 3rd implementation of Executive Order 13959 as amended, there has been 48 trading days in a row of over $2 trillion on the reverse repurchase program, because it has further tightened the noose around these fucking market makers and prime brokers and hedge funds. Listen to this real quick. It's
not just the appropriations process and how they fund it. It's the Federal Reserve. Okay? Okay?
The Fed is the problem.
0.5% of the citizens of this country own more assets than the bottom 90%.
The top.
That's all happened over the last 10 years since 2008. Now, we took a monetary base of what, back in the 80s of what, $800 billion? The balance sheet of the Fed was $880 billion under President Bush, right? The balance sheet of the Fed is $9.5 trillion today.
Oh,
the debt's $30 trillion. We have $100 to $150 trillion contingent liabilities. All just because we're the prime reserve currency. The greatest export we have is the dollar. But all of that rests on the shoulders of our children and our grandchildren. Those are all due bills that are come due. All we've done is we've just cranked everything up. That's why they're talking about these ridiculous, insane bills of trillions of dollars, because the Federal Reserve will print the money. The Federal Reserve, by the way, that's owned not by the American people, a central bank that's owned by 24 prime brokers, being J.P. Morgan and Goldman Sachs and Morgan Stanley. Now, how does that work? And governors that kind of selected, but, 12 years. And the best governor we've had in the Federal Reserve right here in Dallas, Richard Fisher, who told you what was going to happen by going to negative interest rates, told you what was going to happen by printing all this money and having $4, $5, $6 trillion, $7 trillion, $8 trillion, now $9 trillion on the balance sheet of the Federal Reserve. It's going to cause, you talk inequality, it's not a $15 minimum wage, that's tip money. We have, I think M2 today is what, 22 or 23 trillion dollars.
Oh, God.
That's how the administrative state pays for itself. We don't need to audit the Fed. We need to end the Federal Reserve.
Yes! End
100%.
the fucking Fed.
The Federal Reserve has usurped its power and the power of the American people and our elected representatives. And no, they do not have the consent of the governed. We will not comply. We will not submit, and it must be ended. In closing, let me just remind you, from the founding of this nation up to the founding of the Federal Reserve, for those 100 years, Hamilton versus Jefferson, Andrew Jackson, Abraham Lincoln, Henry Clay, Teddy Roosevelt, William Jennings Bryan, the whole concept of 19th century is almost entirely the politics of money. It was actively debated what the currency was. Who controlled the currency? What was a central bank? Who controlled the central bank? After the Federal Reserve was formed, we've lost that. That is going to be one of the, if not the most major issue we have. We have to end the Federal Reserve. We have to turn it back. That central bank is going to be owned by one group. You know what that group is? The American people. The American people. Not a bunch of fat cat prime brokers on Wall Street. Not guys like, not third-tier bankers from fifth-tier firms like Powell. You're going to have the American people control their own bank and their own currency.
This is your shot, people. Are you going to take it?
Damn right.
You gonna fucking take your shot? Be honest with yourself. How badly do you fucking want it?
Oh, Jackson, my kid.
Jackson the fucking tip, baby.
Let's fucking burn.
I want to hear, before we close out, drop it in the chat right now. Are you fatigued? Are you selling? Are you buying? Are you holding? What are you fucking doing, people? Come on, retail. Tell the short hedge funds. Tell the shithole fucking shills that are watching right now what you're gonna fucking do. Because I'm not giving up my shot. No fucking way.
I'll tell you what I will do. They can buy them at the price I set. And if they won't pay the price that I'm setting, they can come and pay them out like cold dead fucking idiots.
Wolfie sets the price. Cash sets the price. Road Dog sets the price. Queen Bee sets the price. Boss Blunts sets the fucking price. We're gonna be so goddamn rich.
Show me the money!
Jerome Powell, get that motherfucking money printed.
We better go and buy a couple more.
He's gonna wear out the zero key on his keyboard. He ain't even a fucking comma key. So many fucking commas in my bank account when this is over.
We're be so motherfucking filthy rich.
People think I'm joking. I love that, dude. I love it. People actually think we're fucking joking.
Billions with billions.
Stay till the end. Corey Ryder, Cecile, Improved, Diamond Gold. TT, Tell Dog, Maxi. Good to see you all. I'm glad I didn't have my earbuds in.
Dr. McLovin, I'm holding for your wife and your new baby as well. I'm holding for my kids. I'm holding for your kids. Everybody's. Everybody's.
I'm holding for my Lego.
I'm holding for Ken Griffin's jet. I'll buy that bitch on auction soon enough when it gets recode. Have a great rest of your day, everybody. I wish you all peace and wealth. Thank you.